Alrighty, welcome to the weekend video. This is Enda here. As usual, if you've been on this channel before, you know what I'm going to do. And strap in. Let's go for a little ride. Okay, this is we're going to start with the dollar crosses. So this is euro dollar daily. And as you know, if you've been here for any time whatsoever, you know that I'm tracking a contracting triangle in wave B in black here, and this is a long-term chart, so this goes back long way back to 2016, this triangle. Now the question has popped into my head and into my field of view over the week. How do you know that we're not moving impulsively down to create new long-term lows in euro dollar, basically? Well, first of all, I don't, but I do know that on the daily chart anyway, we have now reached levels of, let's say, negative momentum. So downside momentum that have not been seen since February 2020. And what happened in February 2020? We had a major rally in euro dollar. So we went from March 2020, we went from 106 up to 123. So we are now at similar levels, actually more oversold than at that particular period of time. So 18 months ago. So what I'm looking at here is, quite modest in comparison. I'm looking at a three-wave recovery in wave E. We've already had three waves down in wave D. Wave D has extended a little lower than I expected. I expected to fill that channel. So I expected somewhere down around 115. We've got to 112 at the lows. So now I expect a modest three-wave recovery. Is that so much to ask? I don't think so. So I think we will track higher over the next few weeks. If we've hit the low, there's no guarantee on that. But if we have hit the low, then we should track higher. Generally quite correctively in three waves, and I think we'll probably come up towards the 120 level again. So again, I'm talking about 700 or 800 points, and I think it'll be a very messy kind of, probably something akin to what we have already. Now the move lower in wave D has taken, 21, almost a year. I'm talking about 10 months here, almost 11 months to complete this three-wave pattern lower. I'm not suggesting that we get another 11-month basically sideways move in euro dollar to complete this B wave triangle. Now, can I say that we won't? Maybe we will. I don't know. We'll see. But I would expect this three waves up to wrap up probably, January, February, somewhere around there. Okay. Let's move down. So this is the wave C down of that that three-wave move in wave D, and now hopefully we're beginning to look higher anyway. Whether this actually works out or not, I don't know. This is the hourly chart. So I'm looking for three waves up in wave A in blue. So this would be A, B, C up in wave A in blue. And then with wave A in green would be wave A of A. And I think this week's move higher is wave A of A of A. So if you can stick that in your pipe and smoke it. So in general, at this point in time, I think today it looks like we're moving higher in three waves in wave A. Now that could be change next week. I don't know. We'll see how it goes. But I'm looking for that low, the recent lows to hold. So 111.86. At the moment, I want that to hold, and I want a further rally in wave C. To complete three waves up in wave A. So an ABC rally in wave A. That's the outlook for the moment. That was a lot of talking just to say that. Okay. Have we hit the low in cable yet? That's another question. And here's another answer. I don't know. I can go by the prevailing pattern, and the prevailing pattern says that there is let's say at least a momentum shift seemingly happening at the moment. Again, we didn't actually hit. It's been quite corrective off the high, to be quite honest. It looks like we've got a series of 1-2s, but I cannot rule out something else happening here. But for the moment, it looks like we've got one running flat wave 2, one, and now looking for a second wave correction somewhere up to, you know, maybe as high as 135. We'll see how that goes. Here's the hourly chart. At the moment, we've got a very slight higher low. I don't know if this will hold or not. It's very touch and go at the moment. There could be something else going on here that I've been contemplating this today. So I've marked a simple three-wave wave 4 here. It's possible that there's a triangle going on here. So it could be wave A, B, C, D, and E in a contracting triangle, and then we're moving lower again in wave 5. If we break to a new low, that's what I'll be suggesting. But I don't think we're going to see the lows for very long here. I think there's kind of a regime change beginning here. Even if we do get a new low, I'm looking for this wave 2 to come in next week. We've begun something this week. I don't know. Let's see if we can continue it next week in wave 2 in green. Okay, so here's dollar yen. We have come down nicely. You know, obviously this suddenly a decline in dollar yen fits the inflation scenario. And so it'll probably be mentioned, you know, the dollar is declining, the dollar is declining. The dollar has been rallying, you know, hey, let's go back to, you know, that daily pound dollar chart. The dollar has been rallying off the top there for 6 months. You could call that a 6 months rally. You know, in euro dollar, you could call that a 9 month rally in the dollar. That doesn't fit the inflation scenario, I'm afraid. But of course, this little blip lower does. I'm expecting this to be a C wave down. I'm expecting somewhere in the region of 107, you know, 107.50, because that's the wave A low. So I'm expecting that kind of 107 area to be hit when this wave C completes. So I think we've got wave 1, and we're working on wave 2. We'll get 3, 4, and 5. So we'll get 5 waves down, hopefully. That's the base case scenario at the moment. The rally worked out quite well. We've got a top, and it looks like we're building a right hand shoulder here. So we've got a left shoulder head, right shoulder. Let's see if next week brings in a third wave down. There's a possibility that we have wave 1 and 2 complete, and now we are on wave 1, 2, 1, 2. So I'm not entirely sure whether this will actually work out. I'm going to review it again before publishing tonight on the website, but at the moment this pattern fits. You know, it's not absolutely ideal. There might be something else going on here. It could be a larger wave 2 in blue. It could be a running flat wave 2 blue. Some sort of complex correction wave 2. I don't know. We did get a pretty impulsive spike lower again this evening. So, you know, I'm not going to rule out the idea that we are going to move into a third of a third next week. If we do accelerate lower and we break, you know, 112 again, that will probably fairly well fit wave 3 down in green. So watch out for that. Okay, so the stock market is down reasonably well over the last few weeks. I think we've got 5 waves down complete, and that's what I was saying last night. I have to tidy up this, forgive me. My base case scenario here is that, well, the base case scenario is basically wait and see, but the base case scenario is that we have a wave 1 down now complete. And I will just put that in here. This is the 4-hour count, which I haven't updated, obviously, so here we go. So we are now working on a second wave. So I'm looking at about 35,000 again for that second wave. Clean 35,000, 3 waves up. Complete, well, at the very most below the highs. So, you know, there's room to maneuver here. If this is the top, you know, pretty please click my heels together and cross my fingers as well at the same time. If this is the top, then we will see a clearly corrective second wave lower high rally, and that will again shift to a third wave down before Christmas, most likely. So maybe the Christmas rally will be a second wave, you know. If it is, then, you know, more power to you. You'll top out a lower high just for Christmas, ready to roll over in the new year, when people get their sobriety back. Because if you are in any way, you know, inclined to sobriety, you will recognize that this market is horrendously up its own rear end, and it doesn't know. It wouldn't know reality if it hit it in the face with a baseball bat. So, the question is, do we get a second wave lower high? That's what I'm gearing for, and that's what my charts are gearing for. So you can see here on the hourly chart that we were counting 3 waves up in wave A last night. It looks like we've got a 3-wave correction in wave B, which is what we're looking for. At the moment, it's an expanded flat, so we've got 3 down, 3 up, 5 down, new low in wave B. We've got a higher low. Should we lose next week? Should probably bring then a rally in wave C. If it doesn't, and we break lower again, then there's something moving at a higher degree here. Maybe we're moving at a higher degree rather than this wave 1 here. But for the moment, still, you know, eyeing that 50% retracement level, pretty standard. You know, got 35,000, 35,200. We've got 2 previous 4th wave highs here, so we've got 35 flat, 35,300 flat, or in or around. This is a slightly, you know, this is a derivative chart, so it's slightly variance at the tops and bottoms. But anyway, we've got 3 waves up in A, 3 down in B. Should we see 5 waves up into that kind of this let's say, let's call it a target band, you know, somewhere around there. Clear 3-wave pattern complete, then let's see if we get towards the middle of next week, we get an impulsive move lower again. That should fit this scenario. Or maybe we'll take the whole week to complete this second wave rally. That's the thing about the future. Who knows? Okay, let's move on. So that's my base case scenario. We'll see how it goes from here. Here's gold. We're definitely shifting towards this alternate, let's say, bullish triangle scenario. So it's a triangle in wave 4 in blue. We could see, you know, I have one. It's a very reasonable count, and I'm not dissing it at all whatsoever. But soon enough, we're going to get some sort of. We haven't even got confirmation on this yet, but soon enough we will get confirmation on it. I have one kind of bugbear with it, and that is. Actually, I should go to the daily count to show that. My main bugbear with the calling this whole sideways move a triangle is the size of wave A is massively outweighs the relative size of wave B here. So this is obviously another alternate count here, but we have, if we call all of this move down into that 1660 low wave A, well, that takes us what? August 2020 into August 2021. So 1 year to create wave A, and then August into November. So September, October, November. So 3 months to create wave B. You know, it's not ideal. Like a 4-to-1 scenario in wave A and B. That's my biggest kind of bugbear with it. That's, you know, maybe it doesn't even qualify as a maybe it doesn't qualify as let's say a relevant comment there, but anyway, it's there and it's in my head and I can't get rid of it. That's the kind of relative size of the internal waves of that alternate count. Okay, well, what qualifies, let's say, this particular count here as valid enda then? Well, we've got 3 waves down in wave A into March 2021. Then we have wave B, which has taken the last 8 months. Yeah, so the last 8 months to and still continuing. So it would be August 2020, which leaves us 4 months into like 7 months, so for wave A, and then 8 months or 9 months, let's say, for wave B, and then we would probably be done in wave C pretty quickly, probably in a couple of months. But the relative size of wave A and B, at least, would be more in line. Wave C waves are usually, sharper affairs and, pretty quick because of their internal form. But anyway, that's my 2 cents. Let's move on. Here's the hourly count. I am working on this alternate count here at the moment. It's the bullish triangle for wave 4. I'm not going to rule it out just because I have some sort of, let's say, cognitive dissonance, let's say, in there. If that's correct, and we have a 3-wave move down. Oh, get out of my way. 3-wave move down in wave C. Then we're probably moving within wave C of C. And then we'll move higher in wave D over the next, few months. Oh, gotta move this over. So we got 3 waves up in wave D and then 3 waves down in wave E. And continually as the price contracts, I suppose the length of time the waves will take to develop will contract too. For the moment, I was eyeing the possibility of a decline in wave 3 of 3. That doesn't look to be happening, to be honest. At the moment, it looks like either we have very awkward set of 1-2 patterns. So that'll be wave 1 and 2 in blue, and then wave 1 and 2 in pink. Still with the idea that we're moving into a 3rd wave down. But that 1758 is still holding, which is is quite interesting to me, to be honest. Okay, for the moment, the upside is looking still pretty corrective. I think odds are that we will break that 1758 low, and we will probably push towards 1720, and maybe even break 1700 again to complete wave C. And we will see how it goes. Okay, let's move on. That's enough talking. I should be more concise. Okay, let's say this is crude oil. Here's against the backdrop of a wailing media speaking about inflation, and it's just 24/7. Every second story mentions something along the lines of, inflation's running out of control. Look at the price of fuel. God, man, if you want a painful price of fuel, move over to, Europe. They just want to gouge you completely. And it's not even the oil companies' problem. It's government. They just gouge us completely. That's the thing with government. It's a monopoly. They can do whatever they damn well please, it seems. Okay. My government is in heaven anyway, so I don't care. My king is in heaven. So the top is in, I think. That's again, base case scenario. Top is in for a long, large B wave. So this B wave has been taking since April 2020, traced 5 waves up, and a completed wave C of a large degree wave B. So what's happening now? Well, then we might be moving down into a complete deflationary spiral in wave C of that larger pattern. If that's correct, then we could see, I'm going to mention it, I'm going to say sub $10 barrel oil. Did you hear that? Yes, sub $10 barrel oil. If this wave C will come, then we are going to, that's what we're going to see. Who knows? That'll be, at the moment, that's way out into the future. That could be a year down the road, or who knows, even 2 years down the road. But at the moment, it looks like we've topped out, at least at a significant degree. We haven't broken the previous 4-wave low, so that has acted, 4th wave, excuse me, that has acted as support so far. So the hourly count, what am I looking at? I'm looking at a possible 3rd wave decline over the last few weeks. This fits because the large acceleration lower actually comes in the point of a third of a third of a third. So this large waterfall moment in the market came in as wave 3 of 3 in green, of 3 in blue. Now, what I'm tracking right now is a 3-wave move higher in wave 4. And this will be wave 3, 4, and 5 of 1. So That shows you where we're standing right now. So we've got wave 3, a possible third wave low in place. If I'm wrong on that one, then this sideways move here could turn out to be a triangle, fourth wave triangle, before we hit lower again in wave 5. So we've got wave A up. Maybe we'll see a higher low in wave B, and then a rally in wave C up towards about 72, maybe again, to complete wave 4, and then we spill again in wave 5. I would like to see these internal lows here hold within these 1-2 patterns. So I'd like to see price hold below $74 as this fourth wave completes. So let's see how that develops. Again, this fourth wave here could be a long drawn out triangle also, so we could just move sideways for the next month. That's quite plausible as well. It does look like the economy is rolling over. I mean, if your eyes are open, you will have noticed the major declines in both online sales and Black Friday, in brick and mortar sales. That is a pretty big kind of, I would say, alarm bell going off there. And there are other things as well that, we seem to have commodities rolling over. So is this kind of, let's say, at least disinflationary cycle grabbing hold again before we fall into complete and outright deflation again? It's very possible right now, especially, if we look at this chart in crude oil. Let's move on. Okay, again, the S&P, the base case scenario right here, right now, is that we are tracing out some sort of a top. We haven't come down as convincingly in the S&P as we have in the Dow. The Dow actually, tracked almost as low as the previous fourth wave correction. Excuse me. So we've come nowhere near that right now yet. Excuse me again. In the S&P, we haven't come down to challenge the previous fourth wave again. So we are still stuck with the possibility that this develops into a rally again. We'll see. We will see. On the daily, you can see that we actually topped out. I didn't think that we would make that we would challenge the momentum that appeared at the peak, let's say back within wave 3 there, but we did. We topped out, probably even just slightly broke over on MACD there. The momentum within the previous wave 3 and the previous wave 1. So again, pointing towards a completed pattern, a top in MACD, 3 separate tops in MACD at 3 separate wave points. We're coming off the boil now. On the long-term chart, it says that we should at least see, this cycle play out. How that develops onto the chart, I don't know. Let's get in the 4-hour chart. You can see we had a very prominent momentum reversal going on as we climbed in wave 5 in blue. So we had 5 waves up in blue. As that pattern developed, we had this series of lower highs, and that did at the previous high a couple of weeks ago. I was talking about that this RSI was about to go negative, and it came negative pretty quickly. Now let's see if RoboTrader comes back and saves the day, or if BTFD at home on his laptop. Well, I'm talking to people at home on their laptops. I'm not talking about you. Don't worry. Let's see if Mr. Robinhood comes back to save the day here again. But this decline is probably causing a whole lot of margin calls right now. So maybe people won't be so let's say willing to take the bit between their teeth to cause another rally. We shall see. At the moment, I'm looking at a possible 1-2 scenario. Today's action definitely fits within that kind of brief. It's accelerating lower again, looking for a third of a third. So if this is correct, and that's an if, that's a big if this is correct, then wave 3 in blue should come down to meet at least 44.60, but I would have to say at this point the only kind of viable level for wave 3 in blue would be at a 162% extension, and that would allow this wave 3 to kind of flesh out a bit. So that brings us down to 43.50. It's a legitimate target if this is a 1-2 pattern within wave 3. So let's see if this third wave develops. If we get a series of steps lower, and maybe one big, let's say one big step lower within that third of a third of a third scenario, then we are on for this larger bearish count. But again, caveats there. Okay, silver, we still, this 1-2 pattern has not been ruled out at all. On the 4-hour count, we are at least, significantly oversold. I'm looking at a 1-2 pattern and a possible one expanded flat wave 2. So this would be all, this recent decline would all be wave C of 2. If this count is correct, then this is actually a pretty good opportunity to take a taste of silver for the upside. If we get a solid 5-wave rally and a solid corrective higher low above current levels, then let's say we rally towards 23 and then correct down towards 22.50 again, then you'd probably be quite interested. I would be quite interested in this count. So this is the hourly count. Looking at wave C down, possible 1-2 acceleration, third wave, fourth wave, and then maybe some sort of ending diagonal fifth wave here. Today and yesterday is basically the market has gone sideways. So it looks like it's some sort of maybe triangle within wave 5 in pink. So we could be talking about, obviously anywhere you see that kind of pinch in the price action, this triangle is very commonly the cause of that. So quite likely that we get another step lower into wave 5 of C to complete this expanded flat correction wave 2, and then I would be next week looking for a step higher to begin a third wave up. So okay, let's see how that goes. The alternate here for silver is, probably, put your hand in your face because we're going a lot lower. This is probably the best case scenario for the alternate count is 3 waves down in wave A into the April lows this year, then expanded flat correction wave B, and then we move lower in 5 waves again into wave C, and we probably hit $18 in that case. The key level here is that 2140 low. If we break that level, then I think this alternate count is the one to look at. Okay, so let's take a look at Bitcoin. We are pushing lower again this afternoon, this evening. So the question here is, do we have a 5-wave pattern done, 3-wave running flat correction wave 2 done? It's very possible. It's very possible. There is an alternate way of looking at this, obviously. We could be talking about, let's say we get wave 3 into here, and then we get an A, B, C, D, and E, some sort of a triangle, wave 4, and then a step lower down into wave 5 again. I'm not against that, let's say, at all. So let's see how it goes. I mean, the glaring pattern here is this 3-wave move down to a new low, which does suggest a B wave, and most likely a B wave in a running flat at this point. So again, base case is that wave 1 and 2 are done, and watch out because we could be moving lower into a third wave. And that's that. Okay, move on. Look at the Nasdaq here. another step lower in the Nasdaq today, which is interesting. Very, very interesting. This has, obviously the FANGs have been the leaders. The markets in general have been held up by the big names, so looks like a pretty sweet head and shoulders pattern here on the short-term chart anyway. So we've got a third wave high, fourth wave low, fifth wave high, a 1 and 2 pattern making up a possible impulse wave to the downside again. So we could be moving lower impulsively into a third wave. If that is the case, then next week should complete a 5-wave pattern lower in wave 3. So if this is wave 1 and 2, and then we have a 1, 2, 3, 4, 5, so wave 3, I could probably move this pattern up by 1 degree pretty easily. Let's get over here. So why not? So we've got wave 1, 2, so 1, 2, 1, 2, 3. So if that's the case, then it quite explains today's move lower pretty well, because this is a third of a third. And if it is a third of a third, then we should see lower prices and a clear 5-wave pattern lower in wave 3 over the next week. So anyway, I think that's me done. Thank you all for listening. I would implore you, I've given you the bad news, I'm going to give you the good news. You're a sinner, I'm a sinner, Jesus died for our sins. We don't have to pay for our sins for eternity, because we never can. It's not possible. Go take a look at the Messiah. He's done the work for you. And I'm a terrible evangelist, but I'd never make a street corner preacher. I would just implore you to at least open your heart to the idea that, the work is done and all you have to do is accept it. It doesn't matter. This is not religion. Jesus came to destroy religion and open up relationship again. Adam and Eve destroyed relationship and religion came in. Jesus came, destroyed religion and opened up relationship again. So it's on the table for you. If you want to take it. If you don't, you want to head off into eternity and depend on your own righteousness, well, more power to you. It's not going to work. Okay? I've told you that right now. Just accept the Messiah. That's it. And, let him sort your life out. Okay. God's blessings to you all. Have a great weekend. And we will see you on the website tonight. Go over, take a look at bullwaves.org and check out the monthly membership. I haven't done the free week. I will do a free access week soon. I'm trying to sort something out on the website right now. My credit card payments are not working for some reason. Anyway, all right. God bless you all. Sorry for rambling so long. Have a great weekend. See you later. Bye-bye.